Real estate procedures and credit drawdown. Navigating the process of buying or selling property. Presentation overview. Real estate procedures. This section will cover the basics of real estate procedures, including the different types of properties and the buying and selling process. Credit facilities and assessment. This section will explore the different types of credit facilities and the credit assessment process. Loan repayment options. This section will cover the drawdown process and loan repayment options. Real estate procedures basics. Types of properties. Understanding the different types of properties is essential for anyone looking to buy or sell real estate. These include residential, commercial, and industrial properties. Buying process. The buying process involves searching for a property, making an offer, conducting inspections, and signing a contract. It is important to have a real estate agent who is familiar with the process. Selling process. Selling process involves preparing the property for sale, setting a price, marketing the property, and negotiating with potential buyers. It is important to have a real estate agent who can assist in the process. Property types. Residential properties. Residential properties are homes that are used for living purposes. Some examples include single-family homes, apartments, and condos. They tend to be easier to finance as the risk is low. However, returns tend to be lower compared to commercial and industrial properties. Commercial properties. Commercial properties are properties that are used for business purposes. These can include office buildings, warehouses, and retail spaces. They tend to have higher returns compared to residential properties, but with higher risk and more complex financing. Industrial properties. Industrial properties are properties that are used for industrial purposes. This can include factories, distribution centers, and storage facilities. They tend to have the highest returns, but also tend to be the most risky and complex investments. Types of ownership. Freehold ownership is where the owner has the complete ownership of the property, whereas leasehold ownership is where the owner has ownership of the property for a certain period of time. Understanding the types of ownership is essential when investing in real estate. Buying and selling process, property searches. Process of buying or selling a property begins with property searches. This involves finding properties that match your criteria and visiting them to see if they are a good fit. Negotiating offers. Negotiating offers is a critical part of the buying and selling process. This involves making and receiving offers and working with the other party to reach an agreement that is acceptable to both sides. Contracts and legal requirements. Contracts and legal requirements are an integral part of the buying and selling process. This involves signing contracts, paying deposits, and meeting legal requirements such as property inspections and title searches. Credit procedures. Types of credit facilities. Credit facilities are essential in real estate transactions. They allow buyers to finance their purchases. There are different types of credit facilities, such as mortgages and bridging loans. Credit assessment process. Credit assessment process is an essential part of real estate transactions. It is a detailed review of the borrower's credit history, income, and other financial information to determine their creditworthiness. Types of credit facilities. Mortgages. Mortgages are a type of credit facility that allows borrowers to purchase a property with the help of a lender. We'll explore different types of mortgages, such as fixed rates and variable rates, and the pros and cons of each. Bridging loans. Bridging loans are a type of short-term facility that is used to bridge the gap between the purchase of a new property and the sale of an existing one. We'll cover bridging loans and their role in real estate transactions. Credit assessment. Credit assessment is a critical part of the credit application process as lenders need to ensure that borrowers can repay their loans. The credit assessment process includes credit checks, affordability assessments, and factors such as credit history, income, and employment. Drawdown related matters. Understanding the drawdown process. The drawdown process is an important part of the credit facility approval process. It involves the transfer of funds from a lender to a borrower, and it is essential that borrowers understand the process to avoid delays and complications. Options for loan repayment. There are various options available for loan repayment, including regular payments, lump sum payments, and prepayments. Borrowers should understand these options to choose the most suitable one for their needs. Drawdown process. Documentation. The first step in the drawdown process is documentation. You will need to provide all the necessary paperwork, including loan agreements, invoices, and receipts, to ensure a smooth and timely disbursement. Approval. Once your documentation has been reviewed and approved, you will receive the green light to proceed with the drawdown process. This step involves verifying the loan amount and ensuring that all requirements have been met. Disbursement. The final step in the drawdown process is disbursement. This is when the funds are transferred to your account or paid directly to the vendor. It is important to ensure that all paperwork is in order and that you have met all the requirements before requesting disbursement. Loan repayment options, fixed and variable rates. Loans can have either fixed or variable rates. Fixed rates remain the same throughout the life of the loan, while variable rates can fluctuate depending on market conditions. Understanding the difference between fixed and variable rates can help you choose the loan that is right for you. Tips on managing loan repayments. Managing loan repayments effectively is important to avoid defaulting on your loan and negatively impacting your credit score. Some tips to help you manage loan repayments effectively include making payments on time, setting up automatic payments, and paying more than the minimum payments each month. Conclusion. Understanding the basics of real estate transactions, credit facilities, and drawdown related matters can make the process smoother and more manageable. We hope that this presentation has provided you with a solid foundation of knowledge to help you navigate the world of real estate. Thank you.